It's Thursday, December 16th, 2023. Lots to talk about today. Please make sure to like this video, share this video, and make sure you subscribe to this channel. I want to continue to get the message out. I want to continue to wake people up. We got to trigger the algorithm. If you're not subscribed, subscribe to this channel. Share these videos. In order to continue to grow this channel, in order to wake more people up, in order for more people to see these videos, we've got to trigger the algorithm. Again, share all of my videos, like my videos, and make sure to subscribe to this channel. Now, getting right into it today. A couple interesting articles that I printed out, jotted down a few notes here. Feel free to comment on any of this you want to, or anything else you want to comment on, feel free. Yesterday was, in my opinion, very, very bizarre when it comes to Jerome Powell and the Fed. Very, very bizarre day, and I think a lot of people would agree. 2 weeks ago, he said it was too premature to speculate on rate cuts. 2 weeks ago, Jerome Powell said this. Yesterday, he's giving a timeline with 3 cuts for 2024. 4 cuts in 2025 and 3 cuts in 2026. What a difference 2 weeks can make, right, ladies and gentlemen? But if we look at what's going on here, basically everything the Fed wanted, they got the opposite. The jobs report was impressive. Unemployment lower than expected. Hourly earnings are going up. Markets continue to rally. CPI hotter than expected. So common sense would tell you that, well, Jerome Powell has to get more aggressive and raise interest rates because he's getting the opposite reaction. He wants to see unemployment numbers rising. He wants to see home prices going down, not up. He wants to see hourly earnings going down. He doesn't want to see market rallies. He's getting everything he didn't want with these rate hikes. So what's he going to do? Instead of getting more aggressive and raising much more aggressively, he's going to give in. And why is that? Could it be, and this is just me putting it out there, is this all political for 2024? Is this just a political move? Did somebody get to Jerome Powell? Did somebody speak to him? I don't know. I'm asking you. Comment down below. Because it would seem to me the Jerome Powell that we've been listening to for the last year and a half, 2 weeks ago, very hawkish, very aggressive, 11 straight rate hikes, and now all of a sudden he's going to hit the brakes here and reverse course. Why is that? Again, the reaction that he is getting is the opposite that he intended. So why is he going to now just give in to all of this, other than possibly being political? Maybe somebody got to him. I don't know. But let me know your thoughts on that. One thing I do know is when he begins, if he does, here's another thing too. He can talk the game right now and say that he's going to cut rates, maybe in March, maybe in May, 3 rate cuts. But we could get to March, we could get to May, and it could be a whole different situation. It could be a whole different song and dance. He could come out and say, look, the data does not support a rate cut right now. We're going to hold off and stay higher for longer. We don't know if he's just juicing the markets right now intentionally. I have no idea. I really, really don't. Or maybe he's just completely lost control. Let me know. Here's one from the Hedge today. Santa Powell unleashes global buy everything frenzy as dollar yields tumble. Dollar is getting slammed. Now, here's another question I have to everybody out there, because I certainly don't know the answers to all of this. I don't have a crystal ball. I'm trying to connect the dots the best that I can, just like all of you. I'm trying to prepare for what I see coming. It does not look good. But one thing we do know right now is there is around $6 trillion sitting in money markets right now. And we're watching the stock market rally, hitting all-time highs, Dow Jones over 37,000. So I think they're going to try to get a lot of people to move out of those money markets, that $6 trillion, and move that into the stock market. And when they pull the rug out on people and trillions of dollars more invested in the stock market, it is going to be absolutely devastating. But they're going to try to sucker people into buying houses, buying cars. They want to sucker you into the stock market, and they would love to sucker people out of these money markets and, you know, come into the stock market, you know, get into the party. You're missing out. What a rally. It's going to be all-time highs. So move your $6 trillion into the stock market. Come gamble over here. Watch out. Be careful, ladies and gentlemen. All I can say is approach with caution. CNBC, GM's Cruise laying off 900 employees, or 24% of its workforce. Very interesting. This is the robo-taxi that General Motors is working on. So 900 more people without a job. They will receive paychecks until February 12th, but here's another 900 people losing their jobs. I believe Etsy is laying off 11% of their workforce. Do these people have mortgages, rent, car payments, credit card bills? You know, we keep hearing that, oh, they're going to lower rates and mortgage rates are going to go down. It's going to, oh, it's a great time to buy a house. Now mortgage rates are like right around 7%, maybe a little under 7%. They don't get it. When you don't have a job, you cannot buy a house. And they keep pushing this whole deal that we have to lower interest rates so people can buy stuff, so they can buy houses. How about lowering the price of the home? You could keep rates at 7, 8, 9%. I don't really care. How about lowering the cost of these homes? I looked at a home last night. It is up 159.3% from 2021. Does that make any sense to anybody whatsoever? A home going up 159% in 2 years. I would rather pay the $326,000 for that house. That's what the house sold for in 2021. Now it's selling for like $859,000. I would rather pay 9% and buy the house at $331,000 versus paying 7% today at $859,000. Makes no sense whatsoever. How do you justify, this is not even in California, but I don't care where it is, how do you justify a home in 2 years going up nearly 160%? Here's another one today. Wells Fargo now warns of massive layoffs for 2024. You know, who would buy a house right now? The market is completely overpriced, and people are getting laid off every day. We have no idea what direction this country is going into. And we know that very, very difficult times are ahead. I think I would add caution right now if you're looking to buy a house right now. Wells Fargo fired 11.3 thousand employees this year alone, and they're warning in 2024 it could be worse. Wells Fargo CEO Charlie Scharf has warned investors the cost could amount to a staggering $1 billion. So you tell me that everything is fine in the banking industry, that the employment numbers, the data that we're getting is real, that it's not manipulated. And I know that there'll be 2 or 3 people that write me saying that the economy's doing great. Just take a look at the stock market. These people are delirious. They have no idea what they're talking about. There is no connection now between the stock market and reality, or the stock market and the economy. There is no connection whatsoever. And people, it's the same people too. It'll be people telling you and I that everything's good, the economy's good, yet these people have no net worth, they don't have $400 saved up, they have student loan debt, they have credit card debt, they owe 5 more years on their car, they're renting a room, and they have nothing. And they have a job that pays $22 an hour and college tuition debt of $80,000. And these people will tell you and I that the economy is doing very, very well. Don't be stupid. The economy is doing very, very well. And I look at these people, I'm going, you're brokey. You're brokey. You're broke. Not only are you broke, you're a debt slave. You owe so much money between your car, your student loan debt, your buy now, pay later plans, your credit cards. And yet these people believe everything is okay because they're inundated throughout the day, sitting in front of a television telling them consumers resilient, economy's doing well, you need to buy a house because mortgage rates are now at 7% or a little bit below 7%. And yet these people will never be able to buy a house. They're never going to have net worth. They're never going to own assets. And yet they believe, these are the people that believe everything is good. This is just pure brainwashing. Retail sales rose 0.3% November versus expectations for a decline. Remember, this is not adjusted for inflation. And when you look at prices, especially of food, continuing to go up, people have to pay more to get less. So how is this a shock that retail sales rose 0.3%? It's not adjusted for inflation. Prices of literally everything, services, food, continue to go up. So you continue to pay more, get less. It's going to cost more to survive, ladies and gentlemen. It's going to cost more to live day to day. And it's only a matter of time. I mean, I don't even know if I even believe this data. I think that I really honestly don't even believe it. When you look at the amount of people now with student loan repayment that has begun, which is certainly not helping retail sales, they just cannot tell you. Oh, real quick note, last month it was revised to the negative 0.2%. So we won't hear any of that in the news today. But last month, October, was revised to negative 0.2%. And this number right here too will be revised also negative. They never tell you that. But I think it's much more negative than 0.2%, or it's going to be much more negative than 0.3%. This is very, very manipulated data. It's, to me, impossible for it not to be better than what they're telling us, because there's just too many people broke. There's too many people now with the student loan repayment. There's too many people living day to day, paycheck to paycheck. Retail sales cannot rise. They're going down. And, you know, okay, whoopee-doo, 0.3%. But again, not adjusted for inflation, and food prices are going up. People have to spend more. So this number is not real. This is a very fabricated, manipulated number. People are broke and they're being forced to spend more. And the next question is, how are they spending? What are they using to spend? You guessed it, credit cards, buy now, pay later plans. Congress passes $886 billion defense policy bill, president to sign into law. This on CNBC, and I bring this up because if you think inflation is going away anytime soon, think again. $886 billion defense policy bill that is about to be signed. This is nearly another $1 trillion, ladies and gentlemen. Where's the money coming from? You know where it's coming from. We're going to borrow it, we're going to print it, and what is that going to do to your purchasing power? It is going to devalue your purchasing power. So expect more inflation. It is coming. This was interesting today on Fox Business. Real estate investor warns U.S. is entering the greatest correction of his lifetime. Grant Cardone, the billionaire, the real estate investor, was on Fox and Friends today, and he said this: it's going to be a great opportunity for individuals, regular, everyday people, to actually grab trophy real estate from institutions. This has never happened in the country, Grant Cardone said. Jerome Powell, he says, has not controlled inflation. He has failed miserably. What he has actually done is created it. I believe that 100%. Now, love him or hate him, Grant Cardone, he's a great speaker. Some people call him a con man. Some people call him a motivator. I think he has said some really good things, but I don't agree with everything he says. I don't really, I can't really judge Grant Cardone. I don't really know where his heart is. Some people either love him or they hate him. But one thing is, he's not a stupid guy. I think we can all agree on that. He's not stupid. But he says this: Cardone believes that rates need to come down in order for prices to come down. This will push mortgage applications up and get more people to put their homes on the market. More homes on the market, he believes, will push prices down. There'll be more competition. I don't know about that. I really, really don't know about that. In my opinion is the low rates have caused these massive bubbles in housing because people could borrow cheap money and buy more house than they could actually afford. And so now what that allows is it allows them now to sit on a lot more debt. Yes, they have a lower rate, but they paid a lot more for the home, and in return, they now have a lot more debt. I'd rather have a higher rate and have less debt and get a better price on the home. That's me. So, you know, I don't know. Is Grant Cardone right here? Does he make a good point? Is it possible? Sure, I guess it is. But, you know, I have to disagree. I think we need higher rates in order for home prices to come down. That's typically, historically, how it's worked. And so, you know, you have a war of attrition here now between the buyers and the sellers. Somebody's going to have to give here, and typically it's the seller that's going to have to give in because at some point they cannot carry the property, or life decisions come along, divorces happen, jobs come up, people have to move for whatever reason. But I think right now things are very, very stagnant. Things are very, very locked up, and we need to see things moving. Yes, I think more inventory would be good, but more inventory is coming. When you look at what's going to happen in the short-term rental market, new home construction, landlords, people who can't afford rent, who are going to move back home, what are those landlords going to do with empty homes? They're going to sell them. There's a lot of things that I believe are going to motivate people to start selling. And of course, the big one is jobs. If you don't have a job, you're not going to be able to keep your house, unfortunately. And that's sad, but that's reality. And we're going to see a lot of people laid off in 2024. We've seen a lot laid off this year. Wait till next year. And when people get laid off, they're selling their homes. And of course, inflation's not going to help people day to day. People are going to get behind the 8 ball, and they're going to be forced to sell the homes. We're going to see people in an economic disaster here where they've cut out so much in their budgets, they can't cut out any more, and they're just going to fall behind. A lot of people are just flat out going to fall behind. And if they don't sell the home, the bank's going to take the home, then the bank's going to sell the home. That's just how it's going to work out. So I don't really agree with Grant Cardone here. He's a smart guy. He could be 100% right, but I disagree. I think the economy is going to shake up the housing market here. It's going to motivate a lot of sellers. Many are going to be forced to sell. Here's another one. CNBC, gold extends gains as Fed's rate cut forecast hurts dollar and yields. So beautiful coin right here. Got a buffalo. Now this coin is probably going to cost you, gold was about $2,050 today. And this is going to probably cost you near $2,200 to buy an ounce of gold today. $2,200. That's about what it's going to cost to go get you an ounce of gold. I think gold has a long way to go. Not to say that we're not going to see gold come under $2,000. There's going to be some volatility. But if the Fed does anything close to what they're saying, gold is going to go absolutely ballistic. Silver, $24.47 today. Still a fantastic bargain. I'm going to continue buying this stuff. These people who said that gold was going to $800, silver was going to $8, I don't think that's ever going to happen again. I would be shocked if gold ever went back down to $1,500, $1,600, $1,700. I don't think it's going to happen. There's just too much going on. Nothing bad has even happened yet, and gold is sitting above 2,000. You have to think about that for a minute. You got most central banks across the globe stockpiling this stuff. Nothing bad has even happened yet, and gold has been hovering, you know, at 1,900 to 2,000 for, it seems like, forever. And now we're sitting over 2,000, literally like what, 40, 50 bucks away from the all-time high it just hit a couple weeks ago. And nothing bad has happened. I believe that this stuff is extremely important right now. I don't think there's ever been a time in U.S. history where owning gold has ever been more important. And I know there are people that despise this stuff. They don't like silver. They don't like gold. They like their stocks and bonds and Pokemon cards and the cryptos and all that. And then there's just many people who just don't like it because they can't have it, because they didn't make the sacrifices. They don't want to work hard. They're lazy. They don't want to make an effort. They can't sacrifice things out of their life. They can't give up the drinking. They can't give up going out to dinner. They can't give up gambling in Las Vegas. So they despise you owning assets. I understand that. I'm going to continue buying it. I make sacrifices. I live way below my means so I can own real assets, so I can be prepared for what's coming. This article from The Hedge today, $15,000 gold. Jim Rickards said the key for investors is to stay focused on the long-term attributes of gold and not get caught up in day-to-day price moves. That's the thing. So many people, they think gold is a crypto. This is not gambling, ladies and gentlemen. Cryptos can go to zero. Many have gone to zero and they're completely obsolete. Gold has been around for over 5,000 years, has never been worth zero. You can go anywhere in the entire planet and people recognize gold as money, as wealth, as an asset. So it has a history, and if somebody could please point out to me when gold was worth zero, please point it out. Or during tough times when people go, you can't eat gold, tell me a time where I couldn't convert an ounce of gold into any currency on planet Earth, convert it into a currency, take that money, go to a farmer, go to a grocery store, go to a vendor and say, give me food and feed me. So in reality, gold will always feed you because somebody's always willing to give you food for it or a currency for it in order for you to buy food. You will always be able to eat if you have gold. But if you're smart, you will put food away right now so that you don't have to convert your gold into some currency or trade it directly across the table for, a cow or a vegetable or some type of food or water. Put your food and water away right now. This is for buying other assets. This is for trading for other assets. This is for buying real estate. This is for buying land. This is for buying other assets. I'm not using this to buy food or water. I have food and water. I'm using this in case things ever get really, really bad. I can survive. And I can take advantage of opportunities out there like land, like homes, like food if I need to. The dollar price of gold is volatile, but that's not significant, Jim Rickard says. $15,000 by 2026, he says, or sooner. He says, buy now, don't wait to jump on the bandwagon. I've been buying for 10 years, going on 11. When I first started buying, I think I was paying, it was around 1,100. Here we are now, we just touched, 2,100 or 2050 right now. So it's done quite well. I would say it's done its job, but nothing bad has happened. People are always like, oh, it should be doing better. It should be doing better. Why? Nothing bad's happened. They're propping everything up. We're limping along. We're kicking the can down the road. This stuff is for when they no longer can kick the can down the road. This is when the lights go out. This is when the dollar is in big trouble. This is your life jacket, ladies and gentlemen, when the ship goes down. I'm not telling you what to do. I'm not telling you what to buy. I'm sharing with you daily what I'm doing, what my circle of friends are doing, what my thoughts are. And as always, if you ever need a reputable place, because people, they're not sure where to buy from or who to buy from. People ask me in the comments, where do I get this stuff from? Go to my link down below, SD Bullion. I've been dealing with them for 5 years now. Great people, great company. I buy gold as it's going up. I buy gold as it's going down. I think that it's just good to put some gold away every month or every couple months. You got a couple dollars laying around. Put it away. It's never going to be worth zero. What will be worth zero at some point is your dollar because it's already lost 97% of its purchasing power. Gold hasn't. Gold still buys. This little coin right here still buys what it bought 50 years ago, 100 years ago, 1,000 years ago. So I believe in the importance of it. I'm not telling you what to do. I could care less. You can buy the Pokemon cards, buy the cryptos, buy the bonds, buy the stocks, gamble your hearts away, do whatever you want to do. I'm sharing with you what I'm doing. But I think everybody would agree, be diversified. If you want to gamble in this and that, have at it. But I think you need to own some gold, some silver, and some solid assets that you can get to. Don't park this stuff in a bank. Don't park it in somebody's vault. This is stuff that you have got to have on hand. Put it somewhere safe, somewhere that you can access it in a time of emergency. Now, moving on here. Fox Business, hungry families in Missouri wait hours in the cold for meals at overwhelmed food giveaway. The need is real. So cars in Missouri here were lining up at 5 o'clock in the morning for food that was going to be passed out at 9 o'clock in the morning, getting there 4 hours early, waiting in line. The event ran out of food very quickly, it says, after giving food to over 200 families. This is, again, reminding you and I that things are not adding up here. Things are breaking apart. And, you know, if you were super, super desperate and you had to feed your family, guess what you would do today? If you had to, if you had no other choice, you would take this, go get yourself a couple $1,000s and feed your family for, you know, the year. That would feed your family for a year, at least. If you really, you know, weren't out buying, you know, T-bones and porterhouses, you could probably feed your family for a year on that little coin. So if you're doing good right now, you have the means, you're making some sacrifices, you've got security, you've got the food, the water, make sure you have some assets because you never know when you're going to need them. People say you can't eat gold. Again, these hungry families in Missouri, if one of those families had one of these right here, they'd be feeding their family for a year. This coin would feed their family for a year. So these people who say that you can't eat gold, they're completely wrong. They don't read history. They don't really know what they're talking about when it comes to money or assets or gold or silver. I'm going to finish with this last article. It comes from Gallup. In the U.S., physical health plummets. One thing I think we can all agree on is most people in this country are not healthy, physically or mentally. There's a lot of mental disorders, a lot of mental issues in America now. There's a lot of obesity in this country. And it says right here, U.S. adults classified as obese, 38.4%. That is up 6% from 2019. So not talking about mental crisis and mental disorders in America, just talking about the physical health of Americans today. 38.4% of U.S. adults are classified as obese. Now, I'm not sitting here or going to sit here and ridicule anybody or demoralize anybody or judge anybody. I want people to succeed. I want people to be successful. I want people to live a long time. I want people to be healthy, mentally and physically. 13.6% of respondents of this survey, and they surveyed over 5,000 people, say they have been diagnosed by a medical professional with diabetes. The obesity rate, and it breaks it down by age, 18 to 29, the obesity rate is 29.8%, 30 to 44, 39.1%. That's literally the prime of your life. You know, 30 to 35, 30 to 40, that's like the prime of your life. 39.1% obese. 45 to 64, 45.5%, 65 or older, 34.1%. Unacceptable. It really, really is. People have got to take responsibility for themselves. And this network of people on this channel are very, very awake. And I know that there's a lot of people just reading the comments that are out there training, they're boxing, they're doing their jiu-jitsu, they're hitting it hard. They're eating better, they're getting more active. It's very, very important, ladies and gentlemen. You know, money doesn't mean anything. And first off, I want to be very, very clear. I don't worship money. I live way below my means. And when I hold an ounce of gold up, that is not to brag or to act like I'm better than somebody. I hold that ounce of gold up because that to me is protection. That is financial protection right there. That is being financially healthy. That is allowing me to survive if things get bad. What's more important is my body. And just being financially healthy is not everything. You've got to be, first off, you've got to be physically healthy, spiritually healthy, and financially healthy. This is not, you know, a one-dimensional game we're playing here. It's multi-dimensional. Yes, you got to be financially healthy. You don't want to be drugged down with a bunch of debt, because when you have a lot of debt, you're going to bring home a lot of stress. You're going to be in a bad mood. That's going to bring on more health issues. If you're a parent, you may not be a great parent if you're stressed out with debt and you have a lot of bills and you're a debt slave, because you're always struggling. You're always thinking about how you're going to pay this back and how you're going to get out of this hole. You're stressed out. So, you know, it's going to affect people's marriages. It's going to affect their families, their kids. It's going to affect their day-to-day life. So it affects you. If you're obese and you're out of shape and you're 50 pounds overweight, 100 pounds overweight, 200 pounds overweight, it's affecting you mentally. It's affecting your way of life physically. It's going to affect the way you parent. It's going to affect your lifestyle. It's going to affect your family. And you're not going to live as long, and it's going to bring on other types of diseases, and it's going to cut your life short, and your life is going to be very limited. And we're getting into very, very serious times here, very, very desperate times. You don't want to be, you know, having to lug around an extra 50 or 100 pounds. You want to be in the best possible shape of your life as we are entering very volatile times. We're going to see volatility on the streets of America, volatility on the stock market. We're going to see volatility in every sector of the human imagination. Things are going to get very volatile spiritually. So my advice today to all of you as I leave you, be in the best physical shape that you can be in. Be in the best financial shape you can be in. Be in the best spiritual shape you can be in. And be in the best mental shape you can be in. Multi-dimensional. You cannot just be strong in one facet here and not the other. Oh, you know, you can have 1,000 of these. But if you're 390 pounds, is it really worth it? If you had to like get out of your house and get out of town, or you had to fight for your life, could you do it? No, absolutely not. You wouldn't last 2 seconds. And if you're in the best shape of your life, but financially you're a wreck, you're going to be in big trouble. So cover all bases. Put all the odds in your favor. Mentally, physically, spiritually, financially. Do it all right now. Do the best that you can. Nobody's saying that you have to have 1,000 of these. Nobody's saying that you have to look like Mr. America. Nobody's saying that you have to be a pastor. Just do the best that you can in all of these facets right here, all these sectors. If you're not improving daily, you're going to lose. You're going to lose. I have a bad feeling about what's coming in 2024. You want to be as strong as you possibly can. You want to be in the best financial shape. You want to be walking close to God, and you want your mind straight. I'm going to leave it there today. God bless. Comment down below, like, share, and subscribe.